In today's episode, how to find life-changing investment opportunities. You truly can't miss this today. Welcome, mining lovers. This is Charlando de Minas, the Spanish podcast dedicated to mining investment. Now, in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Welcome to Charlando de Minas. Today we will discuss what many of you have asked for: the evolution of this podcast, building a community, and investments that can transform your life. Can you imagine multiplying your investment by 40, by 120, or even 240? But how can this be achieved? What does it take to spot these transformative opportunities? That is what we will explore in today's program. Most of people invest with the goal of growing their wealth, but many also dream of the possibility of multiplying their investment several times and change their lives. When I started investing, I realized that I needed to specialize to build a solid circle of competence in a specific sector. That's when I discovered an exciting field, one where year after year companies consistently multiply their values many times over. This is mining. This is the natural resource sector. A sector capable of turning $2,000 into $80,000 in just 8 months. How could you not be drawn into it? Over the years, I have worked with many people who have multiplied their investment in this sector. For example, if you look to the chart of Adriatic Metals, a silver and zinc miner in the Balkans, it went from trading below 50 cents in 2020 to nearly 250 by May 2024, a five-fold increase in 4 years. Then there is Filo del Sol, a copper miner in Argentina, which was trading under $2 in 2021 and reached $32 today, multiplying its value for 16 in only 4 years. Or NextGen, a uranium developer, which went from approximately 20 cents a decade ago to over $10, achieving a 50 times return. You see, those who were there, who saw the opportunity, and who knew how to separate the wheat from the chaff, have multiplied their investment many, many times over. However, as I said at the beginning, this is not just about me, it's about us. I want to hear from you. If you are also captivated by this sector, this is your chance to shape the future of this community. I have prepared a short survey to better understand your needs and desires as investor in the mining sector. You will find the link in the description below or in the comments. Completing this, it will only take 2 minutes, and your input will help me to create more useful content, and who knows, perhaps even build a group of expert enthusiasts who share the project and analysis and opportunities together. Don't miss this chance. Complete the survey now, please. When I started studying this sector, it became clear to me that the combination of commodity boom and a well-performing company could generate incredible, unparalleled results compared to other sectors. Many mention the commodity boom of the 70s as a great example of success of the sector, but there is no need to go back that far. Let's look at more recent examples. During the silver price surge from lows December 2015 to summer of 2016, silver price rose by 50%. This increase propelled many mining stocks to skyrocket by 5 or by 10 times their value or even more. For instance, First Majestic Silver. Its stock rose from 240 on January of 2016 to 19.15 in August of 2016, an increase by eightfold in less than 7 months. Silvercrest, during exactly the same period, it released multiple favorable drilling results, and the share price soared nearly 40 times in less than 8 months, from 8 cents to $3.13 per share. But these are just a few examples of the sector that have this transformative potential, the potential of changing lives. We can also have a look at the case of uranium. Between January of 2002 to May of 2007, the price of uranium increased 14-fold. In January 2002, the spot price was $9.7 per pound, and in May of 2007, it reached $136 per pound. And what happens to the stocks? Let's have a look. Mega Uranium, which was trading to 4 cents per share in September of 2003, and when the uranium was around $12 per pound, it increases 240-fold during this bull cycle. $1,000 investment into September of 2003 will have turned into 240,000 by May of 2007. Another standout company was Energy Fools, which rose approximately 120-fold between December of 2005 to April of 2007. It means that it rose 120-fold in just 16 months. Do the math. An investment of just $1,000 will have grown to $120,000 in over a year. But again, we don't have to look that far back. Every year, every quarter, every week, we have seen mining companies making parabolic moves. For example, if we check first week of December, Cleantech Lithium went up 92% in a single week. Auric Minerals Corp grew by 150,000 in a quarter, and Alliton Resources Corporation increased its value 16-fold in less than a year. Do you see? Tell me what other sector consistently offer baggers like this? In what other sector you could rationality turn $1,000 investment into 55,000, 160,000, or even 240,000? Well, as you can see that it's the only sector that you can find rational investment opportunities that allow you to transform $1,000 into life-changing opportunities. There are multiple strategies for investing in mining, depending on the level of risk that you are willing to take. Since many of you have asked me, let me share that I invest in 3 main ways. We can have a conservative approach, buying large companies at the bottom of a cycle or when they face a temporary setback that they are very likely to overcome. These companies that are leaders in their field often leverage to a specific commodity. For example, Freeport-McMoRan, the largest copper producer in the States, offers solid opportunities when the market is pessimistic about copper or in the broader economy. Franco-Nevada, one of the top royalty companies, combines stability with an attractive dividend yield. These companies allow you to achieve good returns while offering a steady income stream through dividends. The second strategy involves high risk investing in explorers. These are companies in the earlier stage of discovering and defining mineral deposits. Here are a few notable examples. NGX Minerals or Filo del Sol, which have demonstrated spectacular growth thanks to their discoveries in the San Juan region. Way 1 Resources, responsible of one of the most significant rare earth discoveries this year. While these investments carry a great uncertainty, the potential for exponential growth is immense when the right projects are identified. And finally, my favorite approach, developers that are fully funded and ready to build. This stage is known as pre-production sweet spot, a concept popularized by Lobo Tigre. Companies in this segment combine strong fundamentals with opportunities for growth. In the recent years, examples like Adriatic Metals have demonstrated success in this space, offering a great number and the potential for further expansion. Recently, we introduced Rio 2 on the podcast, which also appeared to be a promising case. This approach strikes a balance between risk and reward, offering impressive returns without relying on speculative stages. Over the last year, I have obtained impressive results across all three strategies. In measures, in this conservative approach, Agnico Eagle delivered a bagger while paying a very attractive dividend. In Explorer, copper explorers like NGX have become multi-baggers over time, alongside with Filo and Aldebaran Resources, which have shown notable growth in the recent year. In developers, Adriatic Metals remain a clear success story with a strong performance and multiple opportunities for expansion. However, one thing that I have learned is that you always have to buy a stock for a specific reason. Investing or even speculating requires addressing an answered question and estimate the probability of favorable outcomes. Regardless of the strategy, every stock should have a rationale behind it. Knowing what is the reason and acting accordingly is critical. One of the most common issues that investors face is the time it takes to get the answers. Many confuse inevitable with imminent, leading to rush their decisions. That is why it's crucial to be patient and conduct continuous follow-ups and be willing to reevaluate your hypothesis. If the data suggests that outcomes aren't moving in the expected direction, it's time to sell. It's better to have a control loss of 20 or 30% than let that loss grow to 70 or even 90%. However, despite the consistent effort, striking in the deep analysis, not all the investment yields success. Mining is a sector of extraordinary returns, but also enormous challenges. Only 0.7% of initiated projects eventually become operational mines. This means that maximizing gains require improving the success ratio, which is not an easy task. I have dedicated years to improve my knowledge, which has helped me to avoid many losses and identify numerous red flags. However, I have learned that even a well-prepared investor might not always have enough. A case that illustrates this reality is Ascot Resources, a mining developer that seems to have everything improved and ready to succeed. The company put out its first gold bar without issuing, but complications arose shortly afterwards. The result? A 60% drop in its stock price overnight. Why did this happen? After conducting several inquiries, I conclude that the problems could only be identified by technical experts with a very specific knowledge. A mining engineer might have flagged that the company was using 4 different extraction methods, all highly specialized but with the same personnel. A geologist would have pointed out that the deposit was epithermal with free gold, which possessed issues to the presence of coarse gold. This complicates resource estimation and impacts in the continuity of the mineralization. A process engineer or metallurgist could have warned that the project mining recoveries were way too high and that the reserve table didn't account for significant density variation. A human resource expert might have questioned the management team, a VP of operations and a general manager with unstable track record. Mining is a highly specialized business that demands a multidisciplinary team to analyze the complexity that involves. The key components of the value chain include geology, mining, metallurgy, project management, ESG factors, and underpinning it all to management team. Too often, despite a thorough due diligence and hours of analysis, it's impossible to identify certain issues without the adequate technical expertise. For this reason, maximizing gains from mining projects or companies requires a team of experts who can digest the technical data and see what the average investor cannot see. If any part of the system fails, the entire operation can collapse. This raises a crucial question. How can I identify these technical flags without the specific expertise? Or how can I spot opportunities and potential upside to maximize those results? If I lack these skills, how can I incorporate such technical considerations into my investment analysis? How do I integrate them into my decision-making process to make a better investment choices? These are fundamental questions for improving in the sector, questions that are vital to increase success rate. Over the years, I have realized that investing in mining isn't about finding the company or project that will succeed. It's about ensuring that I've done a professional job of analysis and valuation, always focusing on minimizing risk. Mining is a cyclical and risky business. That's why the key lies in directing all the analysis towards finding the least risky investment, as risk is always present. I know how frustrating it can be to lose an investment because of something an expert could have identified. That's why I want to help. I want to understand how to provide value to increase your success rate. I have prepared a survey to learn what tools or type of experts you need to reduce the risk and visualize upsides in your mining investment. Could we form a group of experts to maximize these aspects? You will find the survey link in the descriptions and the comments. Let's take this opportunity and put something unique together. When I was creating this survey, I asked myself, could current services have detected some of the errors we have discussed? As Rick Rule says, the average natural resource investments level of competence is limited because they don't have the necessary work and the lack of specialized knowledge. Think about this. How can a geologist also master mining engineer? Can an engineer deeply evaluate ESG risks? Or who can combine an expert in metallurgy or project management with the ability of assets management quality? The reality is that many services rely on the analysis of a single person. But can one individual excel in all these areas? Many of you have asked me, what's next for the podcast? I believe that the future lies in creating a community of expert and passionate individuals where each member can contribute their knowledge to make better decisions. Imagine what we could achieve with a network of experts sharing knowledge, analyzing opportunities from all the angles, and uncovering investments that truly change lives. This podcast was allowed me to connect with multiple professionals in the field, people with knowledge that, when combined, neither you, neither I, nor anyone else could ever achieve alone. Could we channel this into creating something extraordinary? Could we build the largest natural resource investment community ever achieved? Are you ready to take the next step with me? Respond to the survey, and together we will define how to create this unique community. Disclaimer: the content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.